Good evening, everyone. It's a pleasure to be here to talk about Mkango. So Mkango is focused on developing a rare earths project in Malawi. Rare earths are a suite of elements. They're at the bottom of the periodic table, and they're used for a whole range of applications. For example, cerium is used in polishing powders, lanthanum is used in fuel cracking catalysts, terbium and europium are used in phosphors, but the rare earth that we're really excited about is neodymium, and that's our major focus. And neodymium is used in rare earth magnets, which go into consumer electronics, clean technologies such as wind turbines, but where we see the real sort of growth coming from in the future is the use in electric vehicles. And every electric, or 90% of electric vehicles use permanent magnet motors. So as I mentioned before, each magnet will comprise about 30% neodymium, and that will go into the electric motor. So that transfers the energy from the battery to to propel the electric vehicle. So each electric vehicle currently uses about 0.7 kilograms of neodymium. And as the technology develops for electric vehicles, and users are obviously looking for longer range, we anticipate that number to increase to about 1 kilogram of neodymium per electric vehicle, which will enable greater power, longer range for a similar size battery. So just assuming that current electric vehicles on the road is about 4 million, we anticipate that increasing to about 32 million over the next few years. So what implications does that have for demand for neodymium? So we anticipate that growth to grow from about 3,000 tons per year to around 28,000 tons per year. So very, very significant growth coming through from use of neodymium or NdPr in electric vehicles. So that's a major increase in demand for NdPr or neodymium. So the current demand in the market is around 30,000 tons per year. So with this growth in electric vehicles, the market will require another 25,000 tons per year of neodymium. So that's almost a doubling of demand. It's a very significant increase. We've seen similar trends for other commodities such as lithium used in batteries and cobalt also used in the batteries. So again, driven by this electric vehicle revolution coming through over the next few years. And that demand increase excludes demand from other clean technology applications such as wind turbines. So every direct drive wind turbine uses about 700 kilograms of neodymium. So very significant use. In terms of rare earths, the biggest producer at the moment is China, but China is also the biggest consumer. And there's very few advanced stage rare earth projects outside China to fill that additional demand coming through from neodymium. So Mkango has been developing one of the very few advanced stage rare earth projects globally. We have a bankable feasibility study underway, and we're targeting production of around 2,000 tons per year of NdPr, and that compares to demand growth of around 25,000 tons per year. So we're focused, our project's located in Malawi. It's called the Songwe Hill Rare Earths Project. Malawi, we've been working there for over 10 years. It's a stable country. It's one of the best countries to be working in Africa. And there's some major infrastructure developments happening in the country. And infrastructure is key for rare earths development. Rare earths is less about mining and more about processing and technology. So it's key to have that infrastructure in place, and that's a real competitive advantage versus a lot of our peer group. We're very focused on sustainable development and corporate social responsibility. All our development will be done to World Bank standards and Equator principles, and there is very strong demand for new sustainable sources of rare earths, and that's not only from consumers outside China, but also from China as well. We also have another division focused on downstream technologies, and in particular recently announced an investment in a rare earth magnet recycling business. So those downstream technologies complement the very large resource base we have in Malawi. We have a strong financial position. We're supported by a strategic investor called Talaxis. So our consolidated cash position was around $11 million as of the June quarter. So in terms of major milestones, we put out an updated resource earlier in the year. So we've substantially geologically de-risked the project. We've had 3 phases of drilling, so we know what's in the ground. We're currently completing that feasibility study. We're looking to get that done by the end of next year, and we're targeting first production by 2022. And that's obviously subject to getting a positive feasibility study done and financing in place. So our strategic partner, Talaxis, is a subsidiary of Noble Group. Noble and Talaxis have a very strong network of relationships throughout Asia. Talaxis have invested £12 million to date for 49% of the asset. So they're investing at the asset level. And that funding is funding completion of the bankable feasibility study. Talaxis can increase its interest to 75% by funding project development. So based on the pre-feasibility study that we completed in 2015, that equates to about $200 million US. So assuming 100 million of equity, that means Talaxis would invest that for an additional 26% of the project. And Mkango would have a 25% carried interest, free carried to production. And Talaxis is also investing in the downstream subsidiary I mentioned, focused on those downstream technologies. And really the aim of structuring that investment like that, and we announced this transaction with Talaxis in 2017, was to minimize dilution in the top company. So both the £12 million invested into the project in Malawi and the $1 million into the subsidiary focused on downstream technologies went in at the asset level or the project company level. So we don't anticipate having to go back to the market to raise further funds at the Mkango level, top company level. In terms of the board and management team, the company was co-founded by myself and Alex Lemon. Alex is here today as well. And we both have a technical background and complementary experience. I worked for Rio Tinto and various investment banks, and Alex ran a gold mining operation in Central Asia, a lot of experience dealing with governments and licensing in emerging markets. We strengthened the board last year and brought in 3 new directors. Susan Muir was ex-investor relations for Barrick Gold, so she's spearheading our investor relations in Canada. Sandra du Toit is an executive director with Standard Bank. She's based in South Africa. She's financed many mining projects in Southern Africa. And Sean Tracy is with a private equity group based in Sydney. Also, Adrian Reynolds was part of the executive team of Randgold, which is one of Africa's real success stories. Randgold has seen projects through from exploration to production, so a lot of experience developing projects in Africa. And Derek Linfield, our chairman, a lot of experience in cross-border transactions in Africa. So it's a technically led team by myself and Alex, long-standing relationships in Malawi, continuity of management, and that's really key for turning this project, getting it to the production stage. In terms of the history of the project, it was first discovered in the 50s by the British Malawi Geological Survey. It was drilled by Japanese government groups in the late 80s. What's changed since the late 80s is all the infrastructure developments in Malawi, And clearly we're seeing a lot more applications coming through for rare earths, and in particular clean technology. So we were working in Malawi, and we were awarded the license in 2010, just as the first surge in rare earth prices was coming through. So we listed in Canada, we did 2 rounds of drilling and published the maiden resource estimate in 2012, increasing the resource from 1.3 million tonnes when it was drilled by the Japanese groups to around 30 million tonnes in 2012. We completed a pre-feasibility study based on that resource in 2015, updated the resource earlier this year, increased it to 50 million tonnes, so substantially longer mine life, and now we're completing a bankable feasibility study based on that larger resource. And just to illustrate the difference, you'll see the picture on the left is what we based the pre-feasibility study on. That's a plan view indicating the size of the resource. So the pre-feasibility study, the results were an NPV of 345 million, CapEx of around 200 million, and IRR of 37%. The image on the right is the updated resource. We've done a lot more drilling, and as you can see, it's much larger, so we'll have a longer mine life and/or the option to have higher throughput and bigger production. The rare earth mineralization extends to depth, but this will be an open pit operation. Pretty straightforward mining. We'll probably use a contract miner. It's broad zones of mineralization, so it's not narrow veins or dikes, so it's a simple mining operation. Malawi is a great place to operate. We've been working there for over 10 years. We have very supportive government. They've been to the site, in fact, supported from the Malawi government, also the British government. We recently had the British High Commissioner visit the site, had the Minister of Mines, and we're getting very strong support for this project to be developed. Malawi is predominantly an agricultural economy, so this would transform the country. And what we're seeing at the moment is infrastructure will unlock the mineral potential in the country. So there's a new railway line which crosses the bottom half of the country, and that railway line is actually exporting coal from Mozambique out to a deep water port at Nacala. But we'll use that railway line to bring in reagents to process the rare earths in Malawi. And this is a bit more of a close-up on that infrastructure. So we're about an hour and a half's drive from Blantyre, which is the major commercial centre in Malawi. There's an international airport there. The road is paved to within about 13 kilometres of the site, and the rest is a gravel dirt road, which will be upgraded as part of the mining operation. And the railway line, the railhead is in Blantyre, so we'll bring in reagents, truck them to site, process the rare earths on the site, and export a high-value mixed rare earth product. So this is a real competitive advantage for us. Many other rare earth projects outside China, they're in the middle of nowhere, and you need ice roads, and they're very difficult to get to. So this is a big advantage for us. In terms of the feasibility study that's ongoing, there's 3 real sort of key components to that feasibility study. The first is mining. So based on that larger resource, we're looking at options to have higher production rate or a longer mine life. Now, higher production rate will mean higher capex, but higher returns. So we're looking at all the options for what's the optimal production rate for mining. And I mentioned rare earths, it's all about processing. So we've assembled a team of experts in rare earth processing. A lot of the team have already worked on producing rare earth mines and processing plants in the past, and we're currently completing that work in Australia, where there's a lot of expertise in rare earth processing. In fact, the West sort of major producing rare earth mine, Lynas Corporation, is in Australia. And the other key aspect of the feasibility study is the environmental, social, health impact assessment. So we've been completing baseline studies for the last few years. This is being done to World Bank standards and Equator principles, because it's absolutely key that when this project goes into production, it's a sustainable source of rare earths, it's environmentally compliant, because there are ultimate consumers, which will be the electric vehicle manufacturers and the wind turbines. They want to know that the rare earths are coming from an environmentally compliant source. And as I mentioned before, we're seeing interest from groups both outside China and from within China as well, because obviously China is looking to move further downstream in rare earths and produce value-added products, but they need sustainable sources and new sources of rare earths to feed that demand growth that's coming through. In terms of corporate social responsibility, it's absolutely critical in the rare earth sector. In fact, for any mining operation for it to have a social license. And right from the beginning of development of the project, we've had a very strong focus on corporate social responsibility, and that has had a whole range of projects, and they've been modest cost but high impact projects. And as a result of that, we have very good relationships with the local communities and the local chiefs. So for example, we engaged with a local NGO whereby they would come into the classrooms, the primary school classrooms, and they would paint the syllabus on the classroom walls. So instead of providing books which get lost or taken, this is a very, very good way of enhancing education in the primary school. We also teamed up with a Birmingham-based charity, a Sikh charity, whereby we constructed kitchens and dining rooms for local schools, and the Sikh charity, through the sort of Langar program, provided food for the children. And that has meant increased children attending schools, raising educational standards. We've also upgraded boreholes and drilled water boreholes and mended the bridges, upgraded the roads, so improving local infrastructure. We also have a scholarship program with the local schools. So recently we announced an investment in a recycling business. It's a spin-out from Birmingham University. It's called Hypermag. And the reason for that is that we believe primary production, i.e. production for the mine, will be complemented by recycling as well. So in essence, what this means is you take a hard disk drive, for example. It's a complex component. There's a rare earth magnet embedded in that hard disk drive. What this technology does is, using hydrogen, it reacts. So you apply hydrogen gas to the hard disk drive, provide access to the hydrogen. It reacts with the rare earth magnet. It breaks down and then can be extracted as a powder. So if you were to shred that hard disk drive, which is another way of attempting to do it, that magnetic powder would just go everywhere and stick to everything. Similarly, you could try and pick it apart mechanically, but that's very time consuming. So what this technology does is it's a way of extracting rare earth magnets from complex components and then recycling and reusing and remaking magnets. So it's a very interesting technology. It's developed by the Magnetic Materials Group at the University of Birmingham. They're leading experts in the field, and we're investing £300,000 for a 25% interest, and we have the right to market the product, the recycled magnets, and supply any primary material that might be required to blend with that recycled material to broaden the range of applications. So we're currently completing the definitive agreements for that transaction, and we'll be announcing completion in due course. In terms of news flow, as I mentioned before, we have metallurgical test work underway in Australia. We'll be announcing the milestones in that metallurgical test work, and that's developing the processing flow sheet to extract the rare earths from the ore. We'll be doing pilot testing in Australia. That's to test the processing on a larger scale. So we have a 60-ton bulk sample in Australia awaiting the start of that program, and we're looking to get the feasibility study done by the end of next year. and that's a bankable feasibility study, and it's fully funded by our strategic partner, Talaxis. In terms of the company itself, our market cap is around $10 million. Current consolidated cash positions around 11 million US as of June. So the share price and the market value is actually completely underpinned by our cash position at the moment. And share price performance, it's held up pretty well despite the markets. We had a jump in share price in 2017 when we announced the Talaxis transaction. Strong shareholder base. RESOC, which is the Resource Early Stage Opportunities Company, it's a major shareholder. They're a focused investment fund on the mining sector. Talaxis is our strategic partner, so they also have an interest in the top company. And then we have various other investors, including our chairman, Derek Linfield, who acquired a significant stake in the company. So a lot of support from the board as well. In terms of the peer group, looking at the graph here, that really illustrates the Australian rare earth sector. That's the biggest sector for rare earths. Those other projects on that page, they're all at the feasibility stage. We're in the bottom left-hand corner. As I mentioned, around $10 million. The Australian companies are trading, some of them up to around $100 million. So our aim over the next few weeks and months is to close the value gap as we move towards completion of the feasibility study. So just in terms of the summarising the investment case, very strong outlook for rare earths driven by the electric vehicle revolution, fully funded BFS underway, the feasibility study underway, no need to go back to the market to raise capital in the top company. We've got a pathway to production. We're working in a great jurisdiction, lots happening in the country in terms of infrastructure, experienced management team with the right technical team and board in place to bring this project to the development stage. Downstream growth opportunities enabling us to leverage off that new sustainable source of rare earths, and significantly undervalued versus our peer group, we believe. Thank you very much.
Well, thank you. Questions for Will, please? Hands up. I just have one to start with, if I may. The deal with Talaxis, how did that come about in the first place? For small resources companies dealing with an organisation like that, it's kind of quite unusual, isn't it? How did that start?
Well, I think it started off as a marketing advisory agreement. And Noble has a very substantial network and presence throughout Asia. And they could see what was happening in the clean technology, in particular the electric vehicle space. So very strong focus in China on promoting that sector. Talaxis are there. They're already marketing different commodities to those companies in China who also consume rare earths. So they could see this transition happening. And they looked at Mkango, looked at our project. They came out to Malawi. They liked the country, they liked the asset, and really that's how it came about.
Okay. Lady at the back, please.
Hello. Thank you for your talk. Do you send the product from Malawi actually to China? Do you have any contracts with China?
So at the moment, we're not producing at the moment. We're just doing the feasibility study. But our strategy is we're not going to be focused just on one market. So China is actually the biggest consumer of rare earths, but we want to be in a position to market rare earths into China, Japan, Europe, Asia, and really wherever there's a market and wherever we can create value for shareholders. So, we wouldn't preclude exporting material to China, but we're also very focused on Europe as well and the US.
Okay, thank you.
Question here, please.
Hi, thank you. What's your base case 2022 share price, and what does that what does that do when if you strip out EV in the business model and batteries don't use this product, they find another way?
I think there's two. I can't give a share price forecast. I saw the. You'll see that the benchmarking. we're doing the feasibility study at the moment. What I would say, though, what I would say is that if you look at the Talaxis have an option to acquire 26% of the project by funding the equity and arranging the project finance. They would need to invest the equity for that 26%, which say it's 150 million based on capex north of 200 million. So 150 million for 25%, and we'd be left with 25%. So there is an implied value from that transaction, but we need to complete the feasibility study, and then Talaxis need to make that decision. So we're a $10 million company, and there's an implied value from Talaxis, the option, and there's implied value from our trading comparables, and we're trading at cash.
Any other questions, please? Gentleman here, please. That's the last one.
Yes, thank you. A quick question about your recycling idea. Do these magnets have a limited lifespan in themselves, or are we talking about scrappage of hard disk drives, motors, and so on?
I think for hard disk drives, there's a lot of hard disk drives available, so that's just one source. I think in the future there's potential source from electric vehicles, but that's a longer time frame. You just have to look at what happened in the platinum industry with recycling of catalytic converters. There was very substantial growth in that sector, and in fact a lot of the platinum mining companies got involved in recycling during that sort of trend. So hard disk drives are readily available. There's other potential sources as well, for example magnets from direct drive wind turbines, from anything where there's a complex component that you need to extract a magnet, and you don't want to pull it apart or shred it. This technology has a real advantage.
We're going to take one final question at the back here, please.
How will mine development be funded?
So, the feasibility study is fully funded by Talaxis at the moment. In terms of the mine development, once that feasibility study is completed, Talaxis, who are our strategic partner, have an option to fund the capital expenditure. So and increase their interest. So if we produce a positive feasibility study, Talaxis can invest, arrange the project financing. So there'll be banks, for example, in Southern Africa, other parts of the world, and they would invest the equity. So Talaxis is the strategic partner. The reason we've structured it like that is so that we have a pathway to production and a source of capital from Talaxis.
Thank you very much indeed. We're out of time there now. Thank you.
Thank you.